Hi, I'm Andy Myers, in for Mike Larson today on Money and Markets TV. The latest domino to fall in Europe's sovereign debt and financial crisis is a big one. Spain's Bankia now says it needs a whopping 19 billion euros in bailout money, on top of the $4.5 billion it already received. That makes Bankia the single biggest bank collapse in Spanish history. Meanwhile, shares of some of the largest Italian banks are falling hard. Intesa Sanpaolo just slumped to within a whisker of a 15-year low, while shares of Unicredit dropped to an almost 24-year low. In Mike's new report, Winners and Losers in the Great Global Banking Crisis of 2012-2013, he argues that the collapse of the European banking system is not just a problem for European bank shareholders or European depositors. It's a massive problem for the global capital markets, our multinational companies, and the U.S. economy. In fact, we've been warning about the magnitude and severity of the European sovereign debt and banking crisis for months now. And all the latest market action confirms that it's deepening by the day. For example, the euro currency just fell to around 124 against the US dollar, its lowest level since July of 2010. Meanwhile, the yield on Spanish 10-year government bonds just hit 6.6%. In other words, it's back to where it was before the European Central Bank bought a period of calm with its long-term refinancing operation in November. At the same time, Italian unemployment is closing in on double digits, while consumer confidence just sank to the lowest level in more than 15 years. Greek banks are suffering mass withdrawals that conjure up images of 1930s-style runs. 23 billion euros have been yanked in just the last 9 months. And Spanish retail sales just plunged a stunning 9.8% in April, the most in any month ever. To make matters worse, there's increasing evidence that Europe's problems are spreading around the globe. Manufacturing activity in China contracted in 10 of the last 11 months, and bank lending will likely miss government targets by $200 billion or more. Meanwhile, India's currency just hit its lowest level ever against the dollar, due to concerns about growth and deficits there. And Brazil's economy is slowing down as well. And here in the US, the outlook is no better, despite what we're hearing from Wall Street. Business equipment orders just plunged sharply. Activity in the service sector sank to the lowest level since December. Consumer confidence tumbled to its lowest since January. And as for that vigorous housing market recovery we've been hearing about, well, pending home sales just plunged 5.5% in April from a downwardly revised March reading. Not only was it far below expectations, it was the single biggest monthly decline in a year. For all these reasons, we continue to recommend taking profits off the table, reducing your stock exposure, and adding downside hedges. If you've taken those actions, you'll be fine. If you haven't, please do so without delay. Because this crisis isn't getting better, it's getting worse by the day. For Mike Larson and Money and Markets TV, I'm Andy Myers. Thanks for watching.